Yeah, hello. Sorry for the interruption. So as I was saying, capital gain tax is a tax payable by a person on gains accruing to this person, derived by that person, and on the realization of chargeable assets. So when we say gains accruing to, it means that an item has been sold by you yourself, or the item has been sold on your behalf, or an item has been sold, the money is yet to be received, or has been sold on your behalf and you are yet to receive the money. That is what we mean by accruing to. So whether you receive the money or not, once the item has been sold, the income on that item or the gain on that item is accruing to you. So the thing you bought it 5,000, but now you sold it for 5,500. The 500 is the gain we are talking about, and it is that one we are going to tax, not the 5,000. Derived by. When they say derived by, it means that you have that money has been generated in Ghana. That is the meaning. And when we talk about realization simply means that change in ownership of an asset. So once the interest in the ownership has been transferred, realization has happened. So it does not necessarily mean that when you sell the thing and you receive the money, you have realized it. No. And when you remember realization concept, you say that revenues are earned whether cash has been received or not. So once the interest in the asset has been received, has been changed, it means you have realized it. You can either sold it. When you sell it, the asset has been realized. When the asset has been destroyed, it has been realized. When the asset has been gifted, you gift it to somebody, it has been realized. So once you lost ownership in the thing, the asset has been realized. That is what realization means. Are you getting it? Good. So realization can happen in three ways. Either it has been stolen or destroyed by fire or accident, or you sell it, or you have gifted it. That is what realization simply means. Okay, good. Now, whenever you realize an asset, you receive something. That is when you sell it. So here we are dealing in selling of the asset. You are not dealing in gifting it or this it has gotten spoiled. So let's look at when you realize an asset by selling it. When you sell the asset, what you receive is called consideration. When you sell an asset, what you receive is called consideration. Helena. And Helena, you are okay. I'm coming. So let's move on. So whatever you received from the sale of the asset is called consideration. Consideration. Okay, whatever I receive from the sale of the asset is called consideration. Now, assets can be realized in several ways. You can do or you can sell an asset in several ways. You can do when we are selling an asset in accounting term. What term do we use for it? Who can tell me? When you are selling an asset in accounting, what does it mean? What term do we use for it? Who knows? Disposal. Good. So when you hear disposal here, it means that we are selling the asset. Now, We can do full disposal. That is, we are selling everything, every aspect of the asset, full disposal. We can do partial disposal. So we'll be looking at these two ways, but we'll start by partial disposal so that you understand. Okay, partial disposal. Now, the law states that where a part of a chargeable asset owned by a person is realized, the cost base of the asset is apportioned between the part of the asset retained and the part realized in accordance with their respective market values at the time of realization, but the cost incurred in realization shall not be what? Apportioned. Let me explain. What they mean here is that if, let's say, I buy an asset for 9,000 and then now I am selling 60% of that asset for, let's say, 5,000. Now, the 60%, its market value is 5,000. But the 40% that is left, what is the market value? So you must also find the market value of that 40%. Then you share the cost, 9,000 to the 60 and then to the 90 accordingly, so that you'll be able to now match the consideration you receive from the 60% to the sale you made of the 60% and know the gain. That is basically what they mean. Are you getting it? That is the technicality they are talking about over there. Okay, good. So let's look at partial disposal, and then we have a formula for that. So I'm sharing my screen so that at least you can follow what I'm talking about. So let me share my screen. Now, whenever we are doing partial disposal, this is the formula that we use. Whenever we are doing partial disposal, this is the formula that we use. So, sorry. So the formula for partial disposal, we say C multiplied by A over A plus B. And this particular formula is used to ascertain the market value of the part of the assets unsold. So this particular formula is used to ascertain the market value of part unsold, because the market value of the part that is being sold, you'll be given. So the part of the asset that is unsold, we use this formula to derive it or to get it. Are you getting it? So that is the formula, where A is the proceeds from the part realized or the part you are selling. C is the original cost of the asset you bought. And B is the market value of the assets retained. So B is the market value of the asset retained. Good. That is what it means, or that is the formula or the breakdown of the formula. Now, let's pick this illustration. So you write as I type. It's in your book, but I didn't snap it here. So Jumbo bought a piece of land at Tema. In December 2006. In January 2009, he sold a portion of the land for 6,000. The market value of the portion unsold was 9,000. Determine the chargeable gain and the tax thereon. So now, this is the question at hand. So Jumbo bought a piece of land at Tema for 6,000. Then he sold the land for, he bought the land for 6,000, and then the market value of the part sold, the market value for the part unsold is 6,000. Now, at the end of the day, we wanted to identify the chargeable gain. So we say that we use the formula A multiplied by A over B, A plus B, where C is equal to the 8,000 or the original cost of the asset. Or they say he bought a piece of land in December for 2006 for, I left that one for 8,000. So the original cost of the asset is 8,000. So let me highlight the important part for you. If you don't understand, you raise up your hand. I'll call you. So the important part, he bought it for 8,000. Then the portion is sold is for 6,000. But the portion of the unsold is 9,000. Now we have to determine the chargeable gain. So first thing you do is to determine the market value of the asset sold. So what you do is to determine the market value of portion sold. Please, let me attend to this call. Please kindly continue the question. I'll be with you. Yeah, Mercy.
Selma.
Yes.
Please, what you are doing is in page what?
My page is page 30. So go to your handout and the capital gain, the illustration is there, and be doing it. I'll get back to you very soon. Very, very soon. Have you seen it?
No, not yet.
Check it out. Check it out. It's in your handout. I don't know which exact page it is.
Capital gains tax. Oh, yeah, no, sir. I thought was I say walk now I'm sorry. Now I question plan so. Obe peda university now you one now. Okay, that's it. Hello, Dell. Dell. That's it. Yeah, no. You think a boy no. I don't think I get any baby Bibiana. There is again I know worrying. They didn't think also worrying to save me life. When he says when you do. When you do. Hmm? I don't know can you any baby. Then I'm just in trouble. Everything you know. Yeah, talk on the baby no. And then I feel that Miranda bedi anachi. Na oka. Ono nsusu ne fi bi. O bu anya na baby so na nko be shutu ana na aka bebo. Anya na no be shutu no. Wa hwe hoye. Ana dwane ba Miranda ho. Se sabodo de card n'echi. Enti sabodo car no. Kama Miranda omudwane oni oso ana nse no mudwane onko gina ba. Ana mu se sabodo car na se tuba. Ana be na akwa mu so shutu glass na nka aka sabodo. Ti wo shutu na onto de car na bu ho no. Ana oto. Njo nko be nye movie say yen si. If I'm free someone one lady and besi. Maybe asa. Uncle too. The Baba kind real no. I'm just saying. Hello, on the man. That'll be trying to read it. And Salvador, okay, we answer our catch Miranda to a copa one. Or needing your bina over. What? Hey, brother, I'm strong. Coco, I just some see where you are now. I'm quite different. Yeah, right, sir. Music. Why is it how much yes? Oh, my yes. Oh, I said so, Koran. Huh?
Oh, memes. This is. You can see it. Yeah, hello, who is done? Nobody is done. Okay, so let me still share my screen, then we continue. So the market value of the portion on sold is 3,200. Now we need to know the of parts realized. So the market value of the parts realized is going to be this. You know this formula already.
Hey, sister, girl. I tell you, if you are going to
Oh, mercy.
Is the 6,000 divided by